Good morning, traders. Clearly, the bond market does not believe Mr. Powell and inflation and interest rates almost to 2%. Amazing pop here. You can see the chart of the 10-year here um, with the gap up. Obviously, bond prices are down, and 2% is within striking distance. So just like we look at anything else, we just simply look to the left. And this bottoming process here, well, first the short moved down, the climactic moved down, which had the potential to set up a low, resulted in this sideways move over several months, and then the upward move and the destination, which I've talked about with subscribers for quite a long time, was this 2% area. And so now yesterday's buying frenzy looks like it was a trap for, bulls here because, especially on the NASDAQ, it's down considerably. Now, with prices having moved up as they did, market wise, not looking at individual stocks, but just looking at the indices and the move that they had over the last week and a half or so, historically, it just, I saw what was happening yesterday. I was like, this just is crazy because historically, this pattern does not produce a huge upside. Now, it could have resulted in some sideways price action, but if at the end of the day, we see yields up here and the equity markets where they are now, lower, clearly we've got a short-term top in place, but we'll have to see how that plays out. This when yields accelerated here and the market sold off, and then they went sideways, they just kind of yawned at that, and now we get another acceleration to the upside. And as I said, 2% or that area is within striking distance. So S&Ps, up into that resistance. Yesterday created a bottoming tail bar, but overall it's just, sideways move. There's the news and drove prices higher. And now you've got a complete retracement down to this area of major support. So there are going to be buyers down here. It's just the way it works. But the rejection of this high, unless it can immediately reverse back up, which is what I guess it'll have to do. And of course, that opens up the possibility. Can this just go sideways here and build an area of support so that the markets can go up there and, tag that 4,000 level? No, we'll see. But anytime we see a retracement after a move like this, right, this created a void. Right? This big momentum move up creates a void. And what's supposed to happen is that strong demand, which was real, of course, is supposed to create new support by going sideways and then push higher, not come all the way back down to where it started. Common sense. So if buyers don't hold this area, that opens up the door to moving lower, and it's still in an uptrend, but it's going to leave this squared type of a top here, which will be more difficult to get through. But I suspect that we won't be able to see enough information until next week to see how this all plays out. So right now, it's just creating the beginnings of I shouldn't say the beginnings of, it's kind of been in a trading range looking at this. And now we're back down into the area of the bottom of the trading range. And we'll see, it hasn't been able to bounce yet. Maybe it just needs to come all the way down here where buyers will feel more at ease with buying at this level, even with stops that are relatively tight. And so that's what we'll be looking for here at the open, to see if it can hold here or it spikes down here and then back up again. And, it may just be another grinder of a day. Are we going to punch through 4,000 on Friday's close? I don't know, Jake. We'll all see what happens together. We don't have to predict right now based on the price action. The answer would be no. But if 11 o'clock today, if the S&Ps are back up to the highs, we'll change our minds, right? I mean, that's the way it is. As active traders, we look at what the trend is. The trend is up. Well, it's kind of sideways here, but there's deep retracement. Let me back up to explain, right? We look at multiple time frames to assess, what's going on, of course. So the same way we look at this retracement being bullish because the depth of retracement here, been able to negate this down move is positive. This one is negative because it came all the way back down. Well, it's got to resolve itself because now these time frames are out of sync. And that is what leads to choppy price action. So will buyers show up here aggressively and push this back up? Will it chop back and forth for a few days to digest this move up and eventually go up here? We don't know yet. Right? This bar is not even done. So we don't even have anywhere near a complete daily bar to assess what's going on. Yesterday, that bottoming tail bar happening after this move up says that buyers showed up on the dip, but it's still not the type of a pattern that supports being aggressively long, looking for this to explode higher unless, you get some kind of a blow off move. And clearly that's not happening. Not at the moment, right? So now, another daily chart, the Dow has been stronger. It pops up to a new high that gets rejected, but it's nowhere near the bottom of this base like the S&P is. Just a simple way of recognizing relative strength without any indicators. Just this one isn't pulling back as much. The advance off of the low was stronger. So this is a stronger index. And now you got a support level right here. And if it breaks down below here, right, let's just assume, hey, it breaks down below here and it's closing below here at the end of the day today. Is market going to make new all-time highs Friday into the close? Miracles happen, but probably not. So all we can go by is historical price patterns. And one in which that would close down here with a big red bar is one that would suggest prices are going to go lower. Right? Norbert is asking me on YouTube, 11, also a major reversal time? No, 9:50 to 10:10, around 10:30. And then usually as you get past 11:30, 12 o'clock, the doldrums. And sometimes if the markets don't move, 11:30, 12 o'clock is when the markets move, and that happens. It kind of runs in cycles. So sometimes the lunch period is where things move. And then usually around 2:15, and then 3 o'clock and 3:30. All right. So damage being done here. Obviously, this has been the weaker, lower high. It had the same bottoming tail yesterday, but now this one is already down near support. So it's already reached the destination that we were looking at with the S&P that it would potentially move down to. So this continues to show relative weakness, but now that it's down here, and we would suspect that those that want to sell would be less likely to do that. And anybody who wants to short, and any common sense or can just simply look to the left would say, hey, this ain't the place to do it after it just fell this far, this fast into an area of a prior low. It doesn't make sense to be selling short down here. Makes sense to cover part of your position and see what happens. And we still don't have any longs. And you can see even on the 5-minute chart where we look down here and say, okay, this is an area where we might consider a long because of how far it fell. The 5-minute chart has not reversed yet. So one of the things to look for, see this big red bar here, if this was to get negated, right, in the next 5 or 10 minutes in the area of this prior low with the hourly down here, that should get a short-term bounce against this downtrend started. Got the Russell, right? Obviously been strong, had this power move up, which created a void, and that was kind of selling off there and up, and so the seesaw action that's going on here. And so we'll just see where this ends, and this could turn into, assuming a weak close, this make red bar down here, we could get a measured move and all the way back down to this low. But right now it looks like, let's see how much buyers want to show up here this morning as prices reach these support levels, or not. So I would say if the buyers cannot get this market to move up by 10 o'clock or so, it goes sideways for a half hour, give or take, might be ready for the next move lower. So here's bonds, just now down below here. And one of the things we've talked about recently was the 10-year playing some catch up with the 30-year coming down into the support level, which is what's going to line up with. You can see this is still hasn't even bounced yet. It's still going down, which has got the 10-year, moving higher toward that 2% area. So with this holding up after this move, hard to imagine that equities are going to find strong demand with interest rates moving up. So this unnerved equity markets, this is doing the same now. So after it gets up here, maybe if it begins to hold, market sells off a bit, we get our internals lining up properly, markets start to feel comfortable with interest rates at a level like this, maybe all that unfolds, and it's probably going to take, who knows, could take a month. We don't know. Right now, yesterday's move up on the Fed's comments just seemed to be a trap for bulls at the moment. And the bond market is saying, whatever you're saying, we don't care, right? We believe there's going to be inflation, what you're doing. And, it certainly makes sense. And with the price of oil having moved up this far, if you've put gas in your car recently, the cost of filling up that tank certainly went up. So there's some inflation there. And gold and food, right? Dan is saying, and housing. And gold has just been a slug. It's down on this support, so part of the bottoming process, but it popped up yesterday and now another trap for buyers. Silver, not as bad, but still chopping around there. And transportation index. I suppose this is going to turn red here today as well. But that's a very nice, strong uptrend. And define that by looking at the distance between highs as they form to recognize, is the momentum still strong? So, that was a nice move for a little correction. Another nice move, right? Little sideways dip, 180 reversal, big wide range bars, kind of unusual. But then another nice momentum move before corrective price action. So this type of move where the momentum stays relatively constant is bullish. And so even though this corrects, comes down here, you look to buy the dip again, it's when the momentum begins to slow and the distance between the highs get closer together that you're getting that slowing in momentum. And, the indicator people that talk about, bearish divergences, they're looking at whatever, not something like this, where they're pointing out to that, but we just look at the distance between highs. Well, we use common sense as to how prices are moving and the actual momentum of prices. You don't need this. None of those indicators, they're unnecessary if you learn how to read the price action. So anyway, the reason this doesn't work at times where people start getting bearish is because momentum can slow down and speed up. It doesn't change the trend. So this morning, question becomes whether buyers want to step up on this dip toward major support. How far do they want to bring it up? Can they turn this into another bottoming tail bar? Or does it stay down here because interest rates are moving higher, bonds are moving lower? This hasn't reached its destination yet. So as bonds reach a point where buyers want to step up there and yield comes up to a point where it's not likely to continue to move much higher without consolidation, it probably gives equities some relief to consider continuing the uptrend that it's in. All yours, Dan.
Good morning, everyone. All right. Our positions, none of my alarms went off, so we're pretty much fine there. And spiders close strong. We talked about this in great detail for the last hour into the close of the normal whips, FOMC. I said you cannot trust it until 10:30 the following morning. I said, I can't explain it. People go home, talk about, watch the news, and it just is what it is. I've been doing this 25 years, and so I can't say I told you so because I really didn't know. But all I did say with confidence was, don't be shocked if we get a big counter trend gap. So that's what we're getting here today. I sent a telegram, 30-minute low. Let's look at a call spread on that. Amazon, we were looking at for put spread yesterday, but then I said, hold off. I didn't like the deep retracement into the close, and now gap into the low. All the fangs are getting hit. Q's getting hit, obviously, higher interest rates. All right, let's see a couple questions here. Tesla oversold or another down leg? Well, it's with these gaps, it's going to make everything difficult. It did look like a reverse head and shoulders if it could get above the red bar, but now you have an ugly gap. So it's kind of a pattern. You can trade either way, over the yesterday's high, under the low. GM, yeah, you know what? We actually had that in the weekend letter as a 1, 2, 3, and then I canceled it on Tuesday. We did have a put spread. So GM, yeah, over yesterday's high. Yeah, not bad at all. WPM crowd. WPM gapping down. So it's over yesterday's high. Crowd gapping down, but over yesterday's high is a put spread. So many people were asking about this stock yesterday. I'm like, I don't know. I mean, and it just became a wild animal. But the volume here on earnings took out Tuesday's low and closing breakout. But now it's gapping down $7. or $5. So over yesterday's high, put spread. Jose, Unum. It is a buy setup and an uptrend, but it's not a clean buy setup because of this square top. 28, so it is gapping up a little bit over yesterday's high. I just wouldn't expect a new high. Below, deep retracement, say deep all the way near this prior pivot, but that's also a buy setup. So over yesterday's high, and based on the charts and also the broader markets, just I wouldn't be expecting huge moves in these things. Wiki comp. Same buy setup, but it's gapping down. Cop buy setup over yesterday's high is fine. RTX, red bar ignored over yesterday's high is fine. Let's look at some things I have here. Boyd, we found this yesterday. Jake found it, buy setup. Boyd is obviously in the gaming sector and March Madness starting, so that could get some of these things. But I did not like Penn. Penn's gapping down, and I don't like buy setups that have these ugly red bars like that. Norbert Whiskey Yankee. It's it's bullish daily weekly. I can't tell where it's gapping, but let's see what it does. Let's see what it does in the first 30 minutes. But yeah, that's good. We're actually already long Angie. And I said you can add. Today's Thursday, so you can add Tuesday's high. Let's see, Tuesday's high, 1686. 1686 after 15 minutes. Got Popo, Lily, short. Under yesterday's low for a day trade, sure. Sure. Lift here. It has a positive gap. It's at all-time highs. They came out and said their ridership's at all-time highs. Isn't that amazing? In the middle of coronavirus, they were all whining. Nobody wanted to ride in them and so forth. The mentality and the rationale of investing in equities sure has changed over the last year. Sino here, nice gap reversal yesterday, gapping up to 11 though. Could go higher, but needs to digest that gain. How do you like NNOX? Over Wednesday's high for next week put spread. Wednesday's high is yesterday, right? So no, I don't like it because then you got that red bar right there. I think we have better opportunities in some of these things I'm showing you, like the Boyd, the Angie. This thing, wow, this looks like a Reddit toy to me, the way it's moving around. Boop, I just saw this thing going by the ticker, recent IPO. Yesterday, it had an explosion bar after, remember yesterday in MT Live, where someone was asking about what does red bar ignored mean? Look at that ugly red bar closing at the dead IPO low, and then no follow through to it. So this might set up. We can watch 30-minute high on that. Up and down, no pattern. Wow, this is an ascending triangle. Debbie's not here to correct me, but ascending triangle. Look at these higher lows, horizontal resistance, and bam. Gapping up a little bit here off its pre-market high, but that's worth watching. On Dollar General, that was a sell setup. Look at these declining 20 and 50. Look at that. That's a beautiful bearish alignment of moving averages. Beautiful bearish close yesterday, showing relative weakness with the markets strong, but it's gapping down 11 bucks here. But that's a call spread with yields up, XLF gapping up. ASTG, kind of can't tell where you're gapping, but a little bear sandwich here. Yeah, TCAT is in my list. Yeah, that also looks like a Reddit toy to me. Look at that. That was a very bullish day yesterday. EWZ, I saw it was up this morning. Now it's giving it all up, but over yesterday's high. Isn't that bad? Or a put spread? Oh, Hexo. Hexo had earnings, had a big gap up. It's given up 10%. But 30-minute high. I like Hexo. I have it here in the bottom right. Sandal, another marijuana stock I've been watching for a while. AMC, there was an article that said, as of this weekend, 98% of their theaters should be open. Hey, look at our record. Remember how cautious we were with longs in the last hour? But I said we took this one long because I said it's so beautiful. We have to just we have to trade the charts. And so look at that relative strength. That's great. And we also did a half lot of Marriott. Little gap down, but very doesn't hurt the daily bias at all. So you can do the back half over the high, DPW. Over yesterday's high, sure. Yeah, I like this 180 reversal. Yeah, over 4, exactly. Because the high was 399, so exactly correct. Make it get through that even number.